Alrighty, so this week we'll mainly just do the JobKeeper and focus on that. That's sort of flavour of the week, with the claiming process opening up yesterday. So I'll just click here. So just bit of a recap. So the actual enrolment process and approval process, people got to the 31st of May, but people have jumped on board, especially if we've got employees. And as mentioned last week, they've just announced that you have to pay your employees before the 8th of May, not the 30th of April. But that's still a common question and a common issue out there, that you've actually got to pay the employees the $1,500 per fortnight minimum, and then get reimbursement. So the reimbursement or claiming process is the one that has started this week, opened up yesterday. So just to go through at an overview level for employees, so these are small businesses or businesses who qualify for JobKeeper and have been through the enrolment process the week before last, and now they're ready to claim. So last week we talked about the payroll setup, and so this week it's about then making that claim. So majority of employees are within single touch payroll. So there is certainly when we come to the claiming process, there's a link to the single touch payroll reporting, and there's a cross match the tax office will be doing to make sure that you're claiming for the correct employees that you've paid. If you're using mild or Xero, they've got slightly different ways of nominating the employees, but essentially I think mild's a ticker box, whereas in Xero, as I understand it, you make those employees eligible, and then it's linked through to single touch from there. The actual claiming process is similar to the enrolment process in terms of it's through MyGov ID. So it's either your business portal or using your tax agent or BAS agent, and it's an online form that is required to be completed. So part of that is, so there's just before I move off from that, there is a cross match between your single touch payroll and your claiming process. So as I understand it, you don't need to list the employees on the online form, but there's a cross match of the number of employees that you're claiming for. In addition to that, some small businesses will also be able to nominate one, what they call an eligible business participant. So these are either sole traders. So a sole trader can claim for themselves as well as their employees, or if they don't have employees, they can still claim for themselves. We've got partners, as in individuals who are partners. Once again, they can claim only for one of those partners, and that's the process we're talking about now through the online claiming form. Beneficiaries of trusts or directors of companies that are not being paid on as per payroll also can be claimed, once again, one only per ABN holder. Just to clarify that if you are, say, a sole trader, there's no actual physical need to pay yourself, but there is still a need to pay your employees. So if you're a sole trader, you can claim the $1,500 per fortnight as an eligible business participant, but you'll still need to pay your employees. So that does cause some cash flow issues, and as discussed or mentioned last week, the bank's got some hotlines to provide some short-term finance. Another little trap is that sometimes you might have two business partners, and so you can only claim for one, but that one person also cannot have a job elsewhere, basically, and the job being defined as far as I can remember. So I think casual jobs are okay, but if it's a full-time or a part-time position, they can't then also be an eligible business participant. So it's trying to mean that you're you're active in the business, you're not just a silent partner, so to speak. And that's all through your online form and MyGov ID as well. It's just one form, it's just a different section of the form. So that's pretty much it from a JobKeeper perspective. So we've started claiming for people this week. I think, Kim, you've started yours, as far as what Kim Roland-Sims told me. So we're working through that. Just an update on commercial tenancies. So there's a code of conduct. I think that's to be for the Tasmanian Parliament this week. I think it was supposed to be last week, but it wasn't. But it was to go through this week, as far as I know. So just to recap, it's linked to the JobKeeper eligibility. So assuming you are eligible for JobKeeper, and we'll take an example where your turnover has dropped by 30%. What we're seeing is landlords and tenants are just providing information to each other, or mainly from the tenant to the landlord, confirming that they've been successful in meeting their JobKeeper eligibility criteria. And once they're in that space, there's a few elements of the code of conduct, which would hopefully be legislated this week, that come into play. Essentially, one is you can't terminate the lease. No CPI or other rent increases during the period of JobKeeper, as far as I understand. Both parties must commit to the terms of the lease, in terms of making good or and the like. And then your rental reduction. So if we take the example of a 30% drop in turnover, then at least half of that drop, as in 15% of your turnover, or 15% of your rent, I should say, is actually waived by the landlord. And these are parameters, it's the basis for negotiation. So 15% in that example would be waived and 15% would be deferred. So if you're, say if your rent, say, what's making an easy number, $3,000 a month, then 30% turnover drop, so we're talking about $900 a month is effectively the 30% turnover equivalent. And so half of that amount, $450, would be waived, and the balance of $450 would be added to the tab. And post JobKeeper, that would then be repaid back to the landlord over a 24-month period, or the period of the lease. Also, any reductions in outgoings, such as I think Launceston City Council have got council rate waivers as well as deferrals. So anything that the landlord is eligible for needs to be passed through the tenant as well. So that's pretty much just my understanding and what I'm sort of seeing in some of my clients in terms of going through the negotiation process. So some people are doing like monthly reconciliations, for want of a better word, where they'll give the information to the landlord of what their turnover has dropped. And some people are just doing a flat rate, so while in JobKeeper, then this is the estimate. I have a couple of examples where obviously they're wanting proof, as the landlord wants proof. So they're looking for the JobKeeper application, and they're looking for things such as BASs. There's probably a technical issue in that meeting the eligibility criteria for JobKeeper, as in your 30% turnover drop, at the time the tax officer said you can either use cash method or accrual method. And so we've gone down that track with our clients and clients themselves of seeing which is whether they met the test in either cash or accrual. Tax office come out a couple of days ago, they said, we would have probably expected in hindsight, these are my words, not theirs, that whatever method you use for your BAS, it would have been the method you would use for your turnover drop test. That wasn't prescribed at the time, and they're not saying you can't do it, they're just saying that would be their expectation. So what we're now doing when we do the JobKeeper claim, starting this week, is that you do have to report your turnover to the tax office, both for the April claim, you're declaring your April turnover, and also a May forecast. What we've taken the line on is that if you've met the criteria, met the test on a cash basis, then you report on a cash basis going forward for your turnover. If you've done an accrual, then like for like. What the difficulty then becomes is that if you're reporting that to your landlord, then if they're asking for BAS statements, as an example, you might have you might report based on the cash, but then you've met the criteria on accrual, which is fine at the time. So just some technical issues about what information you can give. So we've had some clients come to us and say, can you just provide a profit and loss report out of zero? We can give it to our landlord and just of the revenue, just as a way of proof and have credibility that some accountant's letterhead. Or they may decide to provide them a copy of the claim form, because on the claim form you have to declare that turnover to the tax office. So that's another way of, I suppose, some internal checks and balances between landlords and tenants. And then I have other clients that are just, some businesses are very obvious. If the business is closed or not trading substantively, then it's pretty obvious their turnover has dropped. That's just some mechanics, I suppose, of some practical ways that I'm seeing about how commercial tenancies are playing out. Tasmanian Government, absolute blank screen. That was a bit of a, what would you call it? Debacle was probably too strong a word, but it was an interesting way of handling it at the end. So as of last week, 30th of April was the deadline for many of the government programs. So we were heading towards that, and on Thursday they announced that they would extend most of those deadlines to the 4th of May predominantly, which is yesterday. And then so some clients with that updated information were spending the weekend to do that. And then come Monday morning, that all those deadlines were changed and all the application forms were taken off the website. And then, so they've made some inquiries for some clients, or some clients made some inquiries yesterday. And they late Friday night, someone in the bureaucracy decided that they were going to pull the funding, and there were 1,000 applications in the system ready to be processed. Or been drafted by the businesses, and we're working to the 4th of May deadline. So a bit of, I suppose, pressure came yesterday that for those 1,000, as I understand it, they opened up the hardship and, or mainly the hardship grant, and so that people had till midnight last night to lodge it. But the business continuity grant wasn't reopened. So it was an interesting way that they handled it. Instead of my logic would have said, well, if the money was running out, then you would have just accepted the applications and allocated whatever you had in your kitty. But they probably didn't do themselves any favours by just pulling things down on Friday night, when during the day on Friday, it indicated that the 4th of May was the deadline. So pretty much all that's wrapped up on the first wave. What we'll see in the second wave, I'm not really sure. Some industry bodies are getting funding to assist businesses, but we've probably seen that first wave just come and go, and it's probably more likely to be more stimulus type of investments, probably in the tourism, hospitality industries, and probably not to come into line until I suppose the lockdowns been applied in those industries, or been relieved in those industries. So so that was a bit of a disappointing end, but that's what happens sometimes. Just a recap on the cash flow boost, which is the $10,000 or $10,000 minimum, up to $50,000 maximum, linked to your March quarterly BAS when that's lodged, based on either your PAYGW for the March quarter or 300% if you lodge monthly. We're now starting to see that flow. And just a reminder that is tax-free money. So if you're doing anything with your accountant, just I've been suggesting to clients just to create a new general ledger account to track that. And just so that at the end of the financial year, that can be identified as tax-free money on your tax return. I think it's been, the examples that I've been given, the only offset of that cash flow boost is the amount that you are owed for your March BAS, and it's not picking up any previous outstanding amounts owing, and that's sort of coming through off the system. So you get the net amount. So if you're eligible for 10,000, your March BAS was 5,000, you should receive 5,000 into your bank account. We are seeing a little bit of blockages and hardline stance from the tax office that if someone was late in their tax returns, so they hadn't done anything for the 2018 or 19 year, unless it was in a lodgement program with a tax agent, then they're not paying out on the cash flow boost at all. And also seeing a little bit of some blockages in the system in the not-for-profit space where they don't lodge tax returns at all. So we've got a couple of examples where we've been lodging on not-for-profit. Some have received it as other businesses have received it, and others haven't. What we're discovering, there's sort of like there's some automated features that the tax office have built into the process, and then there's some manual intervention required. So it may require a call to the tax office, and they've got a from our calls they've got a playbook basically that they need to follow and ask questions and check the criteria on the manual process. And then once you go through, if you do meet their criteria, then they'll release the funds. So just some blockages there, but overall it seems to be flowing. So any questions? So maybe on the commercial tenancy, whether I've summarised it well enough, Kim?
No, all good, I think.
Yep. Is that what you're sort of saying?
Yeah. Yeah. Jesse in our office is across it, but yeah, sounds pretty right to me.
All right. No worries. Do you have any other questions, Kim? Or how have you found the process?
No, I'm all good. Still
All
just, good. Yeah, got a couple of things I've got to do on it, but yeah, all good, I think. Thank you.
No worries. Well, if there's no other questions, we'll leave it there. As I said, we'll record it and pass it around our database, our marketing client list. We'll wrap up the weekly routine. I think now we're getting to more maintenance mode, and we'll probably wrap up the live Q&A that we've been doing every week. Just a reminder, we do have the employee one tomorrow with Andrew Levingham. What we're probably thinking after that is that we'll just broaden that out. So the last few weeks we've been speaking about superannuation and early access. What we'll probably start kicking off tomorrow is we'll just do an update on that and then just talk about superannuation in general, because I just find that when you do ask lots of questions for people, there's a lot of what do you call it? Lack of information, I suppose, or lack of understanding about what their super means for them. And so we'll just probably morph that live Q&A into probably a fortnightly update for super and other investment products that people might find of interest as well. So thanks for tuning in, and we'll talk soon. See you later.
Thank you. See ya.
Yeah.
Bye.